Okay, so last but not least on this list is Amazon. Now, Amazon reported its earnings on Thursday, and the company reported a huge beat, initially coming in at $27.75 per share versus the just $3.57 expected. But that's because the majority of these earnings are from a stake that Amazon has in Rivian, where it earned $1.3 billion. The adjusted earnings per share, meaning taking this big payment out, still came in much higher than expected at $5.80 per share. Revenue also came in slightly lower at $137.4 billion versus the $137.6 billion expected. Now, Amazon did report guidance that wasn't quite as good as expected. Amazon expects the revenue for the first quarter of 2022 to come in between $112 to $117 billion, which is short of the $120 billion that was expected. Now, even though Amazon missed revenue and guidance, because Amazon was able to beat earnings estimates, investors seemed a little bit relieved. Amazon has dealt with some higher than expected costs due to everything that's happened over the last couple of years. But Andy Jassy, Amazon's new CEO, says that even with these challenges, he feels optimistic about the state of Amazon as it emerges from the pandemic. Amazon also increased its Prime membership from $119 a year to $139 a year. Another big headline is AWS. The actual profit generator behind Amazon reported an increase of its profits by 40% during the fourth quarter, which is higher than what was expected. When we look at this quarter, we can see that the $5.80 that Amazon earned is actually pretty insignificant compared to what they have been making in the past. But I think the big reason Amazon's stock price has sat flat for the past year is the increasing costs they've had to deal with lately. And even though $5.80 in a quarter isn't much compared with the $42 they made per share over this year, because it came in higher than expected, it shows that Amazon may be dealing with costs a little better than what was expected. When we look at the last 10 years worth of earnings for Amazon, we can see that revenue has been highly consistently growing. And pretty unique to Amazon, this seems like one of the few companies that actually didn't see dramatic positive or negative changes during 2020, which is a little interesting since I think many people expected them to have a huge boost in sales. We can also see from this chart that Amazon has very slim profit margins, and in general, retail is pretty typically a low margin business, so we would expect this. When we look at their expenses compared with the revenue, we can actually see that only about half of Amazon's revenue is taken up by the cost of revenue, which Amazon describes as the cost to purchase products and shipping costs. Now, fulfillment, which actually cost a lot at $75 billion over the last year, is the cost to operate and staff their fulfillment centers. We see that fulfillment has increased from 15% of revenue to 16% from 2020 to 2021. While this is slightly higher, it's really not as dramatic as many people have been saying. However, because Amazon is a low margin business, this 1% change has a little bigger impact on their profits than other businesses would experience. When we look at Amazon's segments broken down, we can see again very clearly that North America is where the majority of the revenue comes from. But international does bring in a pretty significant amount of revenue too, with the last quarter bringing in $127 billion. However, the international segment brings in almost no profit, so this really isn't very valuable revenue. As I said earlier, the AWS segment is the biggest profit generator with $18 billion in profits over the past year. For comparison, the North American segment only brought in $7 billion during 2021, even though it generated $279 billion in revenue versus AWS only at $62 billion in revenue. Now, if we look at the current forecasted earnings for Amazon, the current expectation is for them to grow from $469 billion in revenue and $33 billion in profits to $725 billion in revenue and $59 billion in profits by 2024. Now, if we look at this revenue growth, we can see that Amazon is projected to slow down by 2024 with a projected 14% growth in that year. However, it is important to remember that profits drive value, and Amazon is one of those few companies where their revenue growth is really separate from how much profit growth they'll actually see. And this is just because AWS is what drives most of their profits and retail drives most of the revenue. When we look at their profit growth, we can see that 2023 and 2024 are currently projected to see 50 and 60% increases. So I think to value Amazon, we probably should split the difference between the two, and to value them, we should use a growth rate of about 26% for the top end of the range and about 22% for the bottom end. That puts Amazon's fair PE value between 62 to 80. Now, when we look over at macrotrends.net, we can see that this is roughly where they've traded since 2019. Still, if Amazon is able to see that 50% earnings growth, they should actually increase their earnings multiple, so this should be a fairly conservative valuation. So when we look at this valuation charted out, we can see that Amazon actually has way more upside than I had expected going into this, and it puts the current 2024 valuation between $7,309 and $9,430 per share, which is about 131% to 199% higher than the current share price. Honestly, this valuation increase is so high that I actually feel feel a little uncomfortable putting it out, but still the reality is if AWS can power Amazon to grow their earnings by 50% in consecutive years, this valuation is definitely accurate, and you'll absolutely see Amazon stock fly. Now, I do want to point out that 2022 is projected a slight earnings decrease, and if that's the case, we may not see much share price movement during 2022. But 2023 and 2024 should see big increases as long as the forecasts don't change. Now, keep in mind that the person Amazon picked to take over control of their business previously ran AWS since it was created. So I do expect that this part of the business will continue to do very well going forward. So Amazon is absolutely a buy right now. Now, that video that you just watched is part of a much larger video where I covered earnings for multiple stocks. So if you want to see that video, click this right here. And as always, thanks for watching.